when Wayne Gretzky was asked why he was such a great hockey player, he said it was because he always went to where the puck was going to be. And so where is the puck going to be as it relates to opportunities and risk factors for us in our business for the next quarter? We look at this quarter that's just passed, and we find ourselves in extremely good shape from the standpoint of interest rates. LIBOR is at 19 basis points. The Fed funds rates at 25 basis points. 10-year treasuries are at 2.35, and in the 30 years at 303. These are all basically historic lows, and real estate usually does very well when there's accommodative financing available. I suggested in my last quarterly report on the economy that the Fed would not raise rates in June. In fact, they did not. In Chairman Yellen's semi-annual report, she said that it was a consensus among the members of the Federal Open Market Committee that we were not yet at maximum sustainable growth. There is a likelihood that there will be a rate increase, very slight, sometime before the end of this year. But they have said they're going to be making that decision on a meeting-to-meeting basis based on how they see the economy. I don't believe we will be achieving maximum sustainable growth of the economy until the very end of the year, if then. Many reasons for that is business investment has been soft. A lot of that due to the fact that oil prices are down and the trading partners are not doing as well as they might. Construction of new homes has historically led us out of recessions. One of the drags we have on the economy now is that housing starts are below their historic levels. This is caused largely by the lack of financing, mortgage financing, for buyers who were otherwise willing to buy and able to pay. And that's because of the controls have been put on lending based on the disaster in 07, 08, and 09. The economy is getting into a robust phase without housing leading it. And that's kind of encouraging. I mean, other sectors are performing very well. The unemployment rate at the end of June was 5.3%, in stark contrast to the unemployment rate in 2009 of 10%. 12 million new jobs have been created. Gross domestic product is in the 3.5% range. Factory capacity at the end of June 30 was at 78%. That's significant from the standpoint of the lack of inflationary pressure. Now, when it gets to higher utilization, 90% or so, that's when you'll probably see more inflation. But right now, we have unused capacity in our plant and equipment, and that's good. We're in an interesting position right now in the economy where the consumer price index is well below the inflation target of the Federal Reserve of 2%. That has implications, positive and negative. If you're out to buy properties, that's a good thing. If you're looking to your properties to increase in value once you purchase them, then that might have a drag on it. Technology and innovation continue to be the major driver in California. Whether it's Biotech Beach in San Diego, Silicon Beach in Southern California, or the Silicon Valley. These are innovative companies creating new technologies, high-paying jobs. I feel very optimistic about the U.S. economy and the California economy over the next quarter.